I would not assume the same bounces as we've been getting for the last 2 months. Hi everyone, this is the 24th after a pretty brutal day for the Bulls. Look at that guy's screen. It went straight through the desk and onto the floor. That's what it felt like for somebody who wasn't ready. Luckily, we were. You're looking at the worst of the bunch. That is the Nasdaq. So you have all the mega tech in there. I did a video on Sunday night sharing the levels that were lost last week, which were pretty harsh. We had 3 red days and a bounce on Monday and a red Tuesday, and here we are, a super red Wednesday. So what happened on Wednesday? Nothing except price action. They lost the support and they couldn't recover it, and it became as resistance. You've heard that term. Prior support becomes forward resistance. The white arrows played out, the red arrow played out late. We still have the orange arrows that could play out. Yes, the orange arrows. So don't be surprised if we fall further. Now, why would that be? Why would this rally, or dip, I should say, be different? The VIX, you've heard of it as the fear index, okay? It's at 18. It is my interpretation that if the VIX is at 18, the companies that have billions at stake, the market makers that sell options, they will change the algo to no longer buy the dip blindly and make a higher high. They will be a lot more conservative in their algorithms, their machines that trade on their behalf. So luckily, I shared a chart with you on the 10th of July saying that on the 24th, I literally put that on the chart, we might have an elevated VIX, and I pointed to 16, and it did hit that and then some. So we had an idea that around this time we should see some drama. Let's look at the SPY. The SPY also hit my targets, the purple lines, which you've had in your inbox every day. If we don't get back to the blue box, so 553, thereabouts, we are at risk of drifting lower. So how do I trade this? If I'm long, I'm not adding. If I'm looking to get long, I won't load up, like this is the mother of all dips. So what's the wild card here? The IWM. So you want to have me believe, Mr. CNBC, Mr. Ed Lee, or whatever his name is, Tom Lee, that the bunch that has lagged for 3 years suddenly is going to wake up and be the one that drive us higher? Like today, the KRE, the small banks that were almost out of business last year, you remember? They want to lead us up. The industrials, you can see that from the XLI. They showed a lot of strength yesterday, 2 days ago, and today they came to their senses, and now they too are falling back into prior zones of consolidations, which are support. I'm not rooting for the markets to come down hard. I just want us to consolidate to establish a better base from which to spring to higher highs. So our portfolio, if you're following my trades today, got extremely green. All trades got fixed. I didn't sit there and just watch them pretty. I locked some shorts, I left some on, I renewed some for out in time, and I shared all of this with you. NVIDIA is the biggest one. So you've seen this chart. They came to fruition, the white arrows, twice. And what happened today? That's the danger. This is the market. This is why you should look at this leader. It lost 126. Do you remember 126, the yellow line? Then it couldn't recover it. It became resistance. And worse, they lost the bottom, triggered another neckline, the orange. So they could have triggered the orange lines today. And if they don't recover 120, maybe even 121, they're probably headed to 108. I'm not bearish on NVIDIA. It is the best company out there. Their P&L has improved 4-fold or something like that. So the path to 108 is available. And if I'm right about selling rallies, this is what it is. Rally sold, new low. Rally sold, new low. What if the next rally is sold and produces a new low? As long as the VIX is this high, these stocks, just like NVIDIA, are at risk of making lower lows.